Let's kick off today's trading session. Here we're seeing a downward trend. We'll open a trade for 3 minutes, downward move with an investment of $300. Besides the trend line, we can spot something else. Hello there, I'm Mary and I'm here to be your dedicated trading guide. Today I've prepared another captivating video. Please do consider hitting the subscribe button so you can stay in the loop with our latest content updates. For those interested in trading alongside me and receiving precise signals, be sure to subscribe to my Telegram channel. You can locate the link in the video's description. In today's session, we'll be diving headfirst into a full-fledged trading experience. Sit back and enjoy the video. Let's kick off today's trading session. On the USD and Canadian dollar currency pair, we've got quite an interesting situation unfolding, one that could earn us some profit. Here we're seeing a downward trend and it's possible that the price is even moving within a descending channel. Let's check that. Well, let's call it a channel even though it's not a straightforward one. The only thing is we might consider that breakout from the channel a false one and keep our trend lines. Now let's wait a few seconds for the price to reach the trend line. But overall, we can start looking for USD and Canadian dollar on the trading platform and get ready to enter a trade. We'll open a trade for 3 minutes, downward move with an investment of $300. I believe we can enter a trade for a downward move from this level and wait for a reversal. Besides the trend line, we can spot something else. There is a resistance zone here where the price has bounced several times. Additionally, if we examine the price action closely, we can identify a powerful reversal pattern. Here is the double top pattern, a robust reversal pattern, just as I mentioned. I've added an arrow to illustrate its function. Right now we expect the price to drop to this zone, the minimum of the pattern, and after breaking this zone, the price should decline further and further. I think the price will reach the end of the line with the arrow, but this might take some time. We have 2 minutes left until the trade concludes, so let's take a look at something interesting for now. I'll remove all the lines and arrows to avoid any distractions. And I'll also add 2 indicators. I'm curious to see what Vortex tells us. By the way, Vortex is also indicating that the market has shifted into a downward trend because the blue line crossed the red line from top to bottom. This signals a reversal in our trend. So what does this all mean? The price here is moving in a narrow range, and Vortex suggests that the price will transition from this consolidation into a downward move. Now, let's see what the alligator is telling us. The alligator also shows that we're about to enter a downward trend. Remember, the alligator consists of 3 lines and their positions signal the trend. Currently, the green line is crossing the red line and is nearly intersecting the blue one from the top to bottom. This indicates the start of a downward trend. In summary, all the indicators are pointing to a need to wait for price declines. By the way, the drop has already started and I believe the trade is already showing a profit. Let's wait for its completion while I take a look on other charts. So the trade closed with a profit. I made $237, not too shabby. Let's keep trading. Alright, let's continue analyzing the market. The Australian dollar and Czech franc currency pair doesn't seem to offer anything interesting at the moment. We'll skip it and move on. Now, the Czech franc and Japanese yen pair, on the other hand, has an intriguing setup. The price is rising and is currently retracing. If there weren't strong reasons for this ascent, we can expect the price to continue downward. In general, we should wait for a good entry point. I anticipate that the price will approach the resistance zone for a retest. Typically, when the price breaks through a support or resistance zone, it tends to return to that zone for a retest. If the retest is successful, the price bounces and continues in the direction of the initial impulse. So let's wait for the retest. Now let's take a look at USD and Canadian dollar. Perhaps there's something interesting there. Oh, this is a very interesting situation. Let's add a resistance zone here. Alright, let's draw something interesting, some interesting conclusions here. On one hand, the price broke out of the channel and headed upward. On the other hand, we initially had a period of consolidation. Let me draw it for clarity. So we had price movement within a very narrow range. Honestly, I don't want to miss this opportunity. Let's open the USD and Canadian dollar currency pair in the trading platform. We'll enter a 3-minute trade for an upward move with an investment of $300. Now let's take a look at the chart. First, we had a rise from the lower channel boundary. After that, the price reached the upper boundary and traded in a consolidation. Consolidation is a market condition where price highs and lows remain fairly unchanged for an extended period. So if we examine this situation, we see the price highs consistently reached a certain level and then the price retraced. With the lows, it's the same story. The price consistently paused at a particular level. There was only one low that went slightly lower, but that's an exception. Therefore, we have a clear horizontal channel. The price entered this consolidation from an upward movement and consequently it exited it in an upward direction. Therefore, we expect the upward movement to continue for about this length. Currently, we see that the upward trend is indeed continuing and the trade is in profit. There are 2 minutes left until the trade concludes, so let's wait for its completion. So we have just a second left until the trade closes, and there it is, closing with a very confident profit. Although I expected the price to reach higher levels, it rose nicely before stalling. It might go even higher in 2 or 3 minutes, but that's not important now because I've already made a profit. Alright, let's remove all our lines and continue working. Now, Czech franc and Japanese yen, by the way, we're still waiting for that retest. There is a very interesting situation here. We should check Fibonacci to see where the resistance level is. Perfectly at the 0.382 level. Not surprising, Fibonacci works like a charm. If the price were to drop to this level now, I'd enter a trade for an upward move right away. For now, let's locate the Czech franc and Japanese yen currency pair on the trading platform. As I mentioned, we'll enter a trade for an upward move as soon as the price drops to support zone. This resistance zone has already transformed into a support zone, essentially a mirror zone. Unfortunately, we still need to wait and wait. Let's take a look at other charts. Overall, there is nothing interesting on other currency pairs. Good opportunities are scarce, unfortunately. Now, on the British pound and Canadian dollar pair, we have a pretty solid support zone that we can grab for an upward move. But again, we'll need to wait for the price to reach that zone. In the meantime, let's look at other pairs. Alright, the Australian dollar and US dollar currency pair. Nothing interesting here. Oh, finally something on British pound and US dollar. The situation in trading is called a combo. We can't afford to miss such an opportunity. Let's quickly switch to the platform and open the British pound and US dollar currency pair. Oh, unfortunately, this pair is currently closed for trading. It would have been ideal for an upward trade. Firstly, we have an upward trend here. Secondly, the price reached the mirror resistance zone. Thirdly, the Vortex indicator suggests that we'll see an uptrend. Fourthly, the RSI is in the overbought zone. Everything points to taking an upward trade, but sadly, this pair is currently unavailable for trading. Well, no worries, we'll find another currency pair. Czech franc, Japanese yen is starting to approach the support zone. Now, on the US dollar and Canadian dollar currency pair, we can go for an downward trade right away. I'll explain why I think so. Firstly, we have a resistance zone nearby. I'll copy this line and place it where it belongs. Here we have a strong resistance zone where the price has rebounded twice. Furthermore, the RSI is at 75, indicating strong overbought conditions in the market. So we have two factors supporting a downward trade. As soon as the price approaches this zone, I'll enter the trade. This will happen in a few minutes, so let's take a look at other charts for now. Oh, on the Czech franc and Japanese yen pair, the price has approached the support zone and is doing a retest. Now we need to wait for literally 30 seconds and see what happens next. If the price doesn't pass the zone, I'll go for an upward trade. If it does break through, I'll go for a downward trade accordingly. As we can see, the price has already broken through the zone, so we can confidently go for a $300 downward trade. Let me explain for beginners what a retest is and how to use it. So in any market, there are support and resistance zones where a large number of orders accumulate, and these orders prevent the price from moving. Therefore, the price bounces from these zones. I'll explain this with our example. We have an uptrend in market here and the lows are continuously rising. This forms a sort of triangle. The lows keep getting higher and the highs remain roughly at the same level. In other words, here are the lows, 1, 2, 3, 4, 5, with each subsequent low higher than the previous one. We see that the first low is the lowest and the last one is the highest. Meanwhile, the highs have stayed at the same level during this time. So we have a horizontal resistance line. Next, the price breaks this resistance zone. This is what happened a few minutes ago. After breaking the zone, there is almost always a retest. This is a market law. After breaking the zone, a retest occurs. This means that the price returns to that zone because some traders are taking profits while others are cutting their losses. During the retest, there are two possibilities. Either the zone holds the retest and the price bounces, or the zone proves weak and the price breaks through it again. In this case, the price broke through this zone and most likely it will now move downward because buyers couldn't sustain the higher level. It's simple, either it breaks or it doesn't. When the price returns for a retest, this moment is called the point of uncertainty. Nobody knows what will happen next, whether the zone will hold or not. In our case, a red candle, quite strong and confident, formed on the chart. Therefore, we entered a downward trade after this candle formed. If the price has bounced from that level, we would have gone for an upward trade. I think it's all pretty straightforward. One of the trading rules is to never rush and wait for confirmation. By the way, this trade is already in a confident profit. I'll go ahead and remove all the drawings on the chart so they won't clutter things up in the future. By the way, it's a good habit to delete previous marks on the chart. If you trade every day, your previous marks and analysis can confuse you. Let's say you traded for an upward move yesterday, and today the market is falling, but you look at the previous analysis and think that the upward trend is still ongoing and you should trade upward again. This often leads to losses. So if you're trading daily, make it a habit to remove alt analysis from the chart. We have 20 seconds left in this trade. Let's wait and continue trading. And there the trade closed with a confident profit. As you can see, we caught a very strong movement and earned $225 in net profit from this trade. $225 in net profit, not bad at all. But today we can open another trade. Let's see what we have next. Currently we're looking at the British pound and Canadian dollar currency pair. There's a breakout here too. Let's see if trading is open on this pair. Yes, fortunately it's open. Here we have a very favorable situation with two strong factors. Firstly, the price broke through the support zone. Secondly, there is another support zone below that price could reach, but the payout percentage on this pair is only 57% and it's not worth the risk. If I incur a loss, I would be able to offset it with substantial profits, so let's move on. Now let's take a look at the USD and Canadian dollar currency pair, which we discussed earlier. By the way, there is something you need to learn and remember as a rule in the Forex market. If you see a strong upward impulse on the chart, as in my case, then you should wait for the start of a retracement. As soon as you see that a confident retracement has begun, come down and draw Fibonacci levels from the beginning of the impulse to its end. In other words, remember to use this technique consistently because it works. In this case, draw Fibonacci levels and wait for a retracement either to the 50% level or the 38% level if it was an upward move. If it was a downward move, wait for a retracement to either the 50% or 61% level and then enter a trade in the direction of the initial impulse. If the price doesn't reach these levels, just skip the situation. This often works, so if you see a strong impulse, immediately draw Fibonacci zones over it. But for now, let's leave this situation and see what else we have. There is nothing interesting on Euro and USD. Australian and US dollar, here something interesting is probably unfolding. The price is approaching our support zone. Although it's not exactly a support zone, it's the lower boundary of our trend channel, but it's still too far from the boundary to consider the trade confident. Let's set this situation aside until the price approaches the zone. Let's say we'll add it to the watch list. Alright, we've already looked at British pound and Canadian dollar. The payout is only 57%. I do not want to take risks here. On the US dollar and Canadian dollar currency pair, the price has already started to bounce back from the 0.618 level. Let's open USD and Canadian dollar on the trading platform. We'll enter here for 3 minutes with a $300 upward trade. We can't even see what's happening on the 15-second time frame, not just the 1 minute. I'll draw everything we need directly on this chart. We see a downward movement, a retracement after the impulse. After that, the price enters a consolidation phase. I'll mark it with a rectangle. Here our consolidation situation is... Well, after this consolidation phase, the price starts moving upward. It has retraced a bit now, but it will likely continue to rise soon. Of course, analyzing the 15-second time frame isn't the best idea, as it can be quite imprecise, but in this case, I waited a long time for the retracement and now it has occurred. Let's wait for the outcome. With just a few seconds left until the trade's end, it's highly likely, about 99%, that it will close in a confident profit. As you can see, the analysis worked very well. On the larger chart, it's clear that after the impulse, the price retraced to the 0.618 Fibonacci level, rebounded from that level and started rising. Alright, the trade has closed with a profit. So far, we have 4 profitable trades and no losses in a trading session lasting about 20 minutes. In total, I've earned around $900, and I think it's a good point to wrap up trading for today. I extend my gratitude for your attention and thank you kindly for clicking that thumbs up button in the episode. Your comments and channel subscriptions hold immense value for me. It demonstrates that there is a purpose behind all of this. Please make sure to subscribe to my Telegram channel. You'll find the link right there in the video description. That's where our collaboration can truly begin. Let's embark on this journey together. Thank you.